Harsh, why the caution? Is it about DRAM inventories or some of the other lingering concerns on the street?
Hey guys, thanks for having me on the show. No, Micron is a relative neutral for us. We just think there are much better businesses that one can invest in. So while the company is doing absolutely wonderfully, we just want to be positioned into more distinctive plays that have differentiated advantage relative to what I would call as a commodity play. At the end of the day, Micron makes DRAMs and NAND, and they are more or less at the whim of supply pressures that come from people like Samsung and Hynix that are much bigger factories than Micron does. And so although the company is doing well, we prefer to be in places like Nvidia, for example, or Qualcomm or other places.
All right, because of the growth in sort of the same buckets like data center or something else?
So no, data center is a bright area that we love. And so we are big, huge fans of Broadcom, which is our top pick, as well as huge fans of Nvidia. I just feel that with commodity plays such as Micron, things can change very quickly. For example, if we were to go into a downturn in the economy, or if supply pressure was to come on from like a Samsung, which wants to take advantage of better pricing, then the fundamentals for a company like Micron can change very, very quickly. And it's almost impossible to predict that. And so, we want to be positioned in places such as a Broadcom, which we think is a much better play, or even an Nvidia and a whole slew of other differentiated chips that are not at the whim of the pricing of a commodity play.
Harsh, what I'd question your thesis is on valuation. I mean, I understand what you're saying about NVIDIA's differentiation, but I mean, it's getting quite a nice premium, it would seem, for that. Samsung perhaps too. Micron, you've got a neutral on it, but the price target's still above where it is now, and I believe you've brought down the multiple on which you're judging it. I mean, it seems like you're open to the idea that it might surprise you.
Yeah, we are open to the idea. We're always open, right? Every day is a different scenario. And then if the economy does pick up, we don't go into a recession, for example, which is what we're hearing as a concern from a lot of our customers. You take a look at stocks like, for example, Qualcomm, which has got extremely good profit margins, extremely good prospects. But when we talk to our customers, we get pushback that there's inventory built, for example, in handsets, and then there is also risk of possible macroeconomic slowdown with interest rates rising. You're seeing that concern surface to the top. And I just feel that, for example, a Qualcomm trading at 12 times is a much better place to be at, despite all the good that is happening at a place like Micron. On Nvidia, it's a completely different thing. If you listen to Jensen's GTC address, there is a fundamental shift going on where Nvidia is transitioning from a hardware company making chips and systems to effectively displaying a model that is software-centric. Extremely high margins, extremely huge, large opportunities at extremely good growth. So Nvidia I would place in a completely different category. And also companies such as Qualcomm and Broadcom have an extremely interesting software angle to their chips. Usually it's a system sale, a chip sold with a bunch of intermingling software that you have to put on. And that gives these companies pricing power and hooks. And that's why we prefer those kind of stocks.